Here to dive into industry trends with leading ETF experts, this is ETF Spotlight with Nina Mishra.
Hello and welcome to ETF Spotlight. I'm your host, Nina Mishra. My guests today are Tim Seymour, founder and CIO of Seymour Asset Management and co-host of CNBC's Fast Money, and Christian Magoon, founder and CEO of Amplify ETFs. We are talking about cannabis investing and the Amplify Seymour Cannabis ETF, ticker symbol CNBS, which is managed by Tim. Welcome to both of you and congratulations on the launch.
Thanks, Nina. It's great to be here. I appreciate the positive words this morning.
Sure. So I wanted to start with the investment case for cannabis. Tell us why investors should consider investing in marijuana stocks and ETFs, and is there anything they need to know before investing?
Sure. I'm sure that there's a whole number of kind of best practices in terms of understanding some of the probably important elements of investing in the sector. And just before getting into the investment case, I think it's important for investors to know that this is like a lot of new asset classes or emerging asset classes, ones where there's a relatively new group of companies, a new group of legislation, a new group of macro drivers, which have created this investment dynamic, which of course then spurs on investment and spurs on both big institutional investment, big retail kind of traditional wealth management and ETF investment trends, and obviously then just big multinational, international companies that are evaluating their place in this sector. People have heard a lot about the growth of the cannabis sector and its emergence from a prohibition-style legislative environment, not just in the United States but globally. And I think there are a lot of perceptions, misperceptions, and there's a lot of elements of investing in this sector that frankly are unique, but also some that, as I said, I don't think are any different than approaching a sector that has a lot of the kind of the evolving and relatively new elements of what's going on here. Just quickly, my background's as I've spent most of my career investing in global and emerging markets. Yes. I lived in Russia in the late 90s. I spent a lot of time in Brazil and Asia. So for me, some of this is very similar to what I feel like I've seen in the development of emerging markets as an asset class. From the early days of where in both terms of who is investing in these sectors at what stages and the phases of development for the capital markets, but probably more importantly for the phases of development for the investment story. So again, I think if you think about cannabis from the beginning stages of where people were starting to pay attention and make investments, it was really based upon a legislative top-down macro assessment of an opportunity that was emerging, and that opportunity for some people started 5 years ago. For some of the companies and the entrepreneurs in the sector that started well before that. But the investable dynamics of the sector started probably most tangibly in 2014, 2015. But that the story is very much of a bottom-up story now, even though the top-down drivers around legalization and around the regulatory framework and around where some of the general consumption trends are going and the demographics around who might be a consumer of cannabis and CBD and hemp products is it's very much a top-down evolving story. But the important part for the investor right now is that the industry is become very bottom-up, and I think it's important to understand which companies are executing, which companies are have businesses that are asset heavy, asset light, Are they in certain sub-verticals in the industry that are high margin? They are very capital intensive, or they are highly efficient, or they are very reliant on either external technology, et cetera. I mean, I think these are all the things that are really exciting about the sector, are that this is an evolving sector at a time when technology and the global forces of just a global marketplace and global capital markets are changing the way every company in the world is doing business. And so the fact that you have major consumer products companies and direct-to-consumer distribution and marketplaces that are taking place for some of the most sophisticated brands in the world, that is also part of what's shaping the cannabis, the emerging cannabis industry, and the brands and the companies that are establishing themselves now, and they're quickly evolving with those trends, and therefore their businesses are that much more sophisticated. And it's why I think it's a fascinating investment idea, even for crossover investors who feel they too have seen this take place in other sectors they're covering. So I'll stop there for a second. I've kind of covered a lot of ground.
Sure. Yeah. So this is a very volatile sector, but as you mentioned, there is huge growth potential. So I think an ETF approach of owning a diversified basket of stocks and active management too makes a lot of sense. And Tim, as you mentioned, you are an early stage cannabis investor, and you also serve as a board member for several private cannabis companies. So could you tell us a little bit more about what drew you to the cannabis industry? You mentioned that you saw the opportunity similar to investing in emerging markets.
Sure. Yeah. My first investments were probably 2015 and then 2016, and I a couple of companies I sit on the advisory board for are companies that I wanted to make investments in, and therefore thought it would be even better if I could have some type of advisory role where I could at least understand the evolving business and some of the strategic assessments that the company managements were making. So, at this point, I would say, I'm involved with companies that range from fully integrated cultivators to companies that are just providing packaging and some of the kind of the core logistics for the sector. There's a company that I'm involved with that's I would call them a kind of online marketplace, but a place where brand influencers are driving sales into dispensaries. So it's kind of a traditional, called a digital marketing platform. There's a company that I'm involved with that is creating essentially creating over-the-top content, but feeding straight into dispensaries and hydro markets and head shops to ultimately be point-of-sale digital marketing. There's a couple companies that I'm investing in that are purely medical biopharma plays. Companies that is an Israeli company that I sit on the advisory board for, who has over 20,000 patient trials of patient data from the early stages of Israel, which was really the one of the first countries, arguably the first, to legalize the medical market and to have a very heavy science and research approach to effectively what cannabinoids were carving out new territory in medical treatment. So it's a full spectrum, and for me. I also sit as a strategic advisor to one of the largest dedicated cannabis funds on the private equity side. So, my ability to kind of see the different deal flow within the sector, but also have interconnectivity between companies. Some companies, a bunch of these companies that I work with are companies that are customers with each other, or have a relationship of some kind, a strategic relationship. It's often interesting where I can see the pieces fit together. Certainly, if you are working with a company who has major dispensary footprints it's very easy to see which brands are gaining ground, are becoming leaders, where you're seeing certain trends in products and form factors of consumption taking place, whether it's the move from pre-rolled joints to oils and vaping, to edibles and consumables, to topicals, especially as you get over into the wellness side of CBD and CBD hemp products. So it's fascinating to have kind of this footprint in the middle of the sector, and it was natural for me to therefore want to try to create a product that allowed investors to have exposure thematically to this sector that was going to give them exposure in all of these different sub-verticals within a sector that is already very different to invest in today than it was 12 months ago, and therefore will be very different in the next 12 months. I think that's where the opportunity for a thoughtful, active ETF product is, I'd like to believe, it's never made more sense for any investment opportunity than it does for investing in cannabis. It does feel a lot like setting up a country fund in emerging markets back in the day, where you're kind of a generalist across investment trends that are going on in one country across multiple sectors, because that's really what this is. Even though if I wanted to oversimplify it, it's a consumer product story more than anything, because that's effectively where it all leads to. And I think that's certainly a major theme throughout the portfolio. But again, our goal and my goal as a portfolio manager for this fund with my partners at Amplify is to present a fund that is going to be positioned in the areas we can invest in today, and can is also a function of what we are legally able to invest in, what the fund as a regulated 40 Act SEC governed fund can do, which we all know all ETFs need to live by. Then there's the legality of the cannabis sector, and where it is federally legal in some countries, but certainly not this country, even though it's legal on the state by state basis. So that's our investment kind of ethos is to be that fund that is capturing all of these important investment themes. Our investment objective is to do it in the construct of those companies that are listed and are available for us to invest in, and I think ultimately portfolio construction is a function of really how we see the optimal exposure today. Some of it is a function of who are the biggest players, and therefore they are going to continue to evolve. But of course, we are not market cap weighted, so therefore part of this is to find themes within the portfolio that best express where we think the sector is today versus yesterday. So that's kind of the approach to this product, and how we need to present this product to investors.
Okay, excellent. So talking about growth in this market, I saw that the global market for cannabis and hemp is estimated to be roughly $300 billion in 2018, and on your website it was mentioned that global legal cannabis sales have been rising approximately 30% per year recently, and 2019 sales are in fact expected to grow 39% from 2018, and there are various other numbers out there by several research groups. So tell us a little bit about what kind of growth you expect in the legal marijuana market, and what will drive this growth.
First of all, it's such a still a very segmented and non-consolidated industry on some level. I think a lot of the macro numbers on the size of the market and the growth trajectory, or the CAGR, is you see a lot of different estimates. I think it's probably confusing for investors. I think if you look at you could look at it from a top-down perspective in terms of So, right, if there's a couple of companies out there that do a lot of great work and are kind of data providers for the industry based upon their access points. First of all, folks that are truly tied into some of the point of sale systems and are actually getting live real-time data, et cetera, from dispensaries and from brands. And then there's a couple companies like New Frontier Data that crunches a lot of top-down global market assessment data. But a number that makes sense to me is that right now, if you look at the adult medical that is legal, and the biopharma, and then you attach the illicit market to that, and you include wellness and CBD related products that obviously let's call them all legal. New Frontier says this is a $450 billion market right now. Yeah. If you listen to just, let's break it down to what's going on in the U.S. I'll footnote the guys at Canaccord, who are one of the leading investment banks in the sector, who put out an update yesterday, and they made an assessment that the U.S. market, again, legal U.S. Adult and medical is about $50 billion in sales sometime over the next 5 years, but that doesn't really begin to even get into the kind of the derivative part of the markets, and it certainly doesn't get into CBD and wellness. Again, there's so many big power stats out there about the size and the growth of this market. There's a number that I just read from one of the big data providers that at this point 14% of all Americans say they use CBD products, and that 14% roughly 40% of that is geared towards some type of non-specific pain. 20% of it is geared towards anxiety. 11% of it is geared towards sleep and insomnia, and on down the road. But what's pretty clear is that roughly 80% of the use cases that someone walks into a pharmacy for some type of an OTC, so not even getting into what's going on the very specific pharma medical side. There's an over-the-counter solution with some level of proven efficacy that's derived from CBD products. So the numbers in terms of just the population that are living in legal states in this country at this point, 98.6% of the population lie in states permitting some form of cannabis. 47 states have legalized some form of cannabis. You've got a couple recent arrivals to this group, including Kansas, which at one point looked like they were well off the radar screen, but now they're accepting at least low THC, high CBD products for limited medical use. So that's their way of legging into this new area. So just in terms of the size of the market, you're going to hear every number in the world, and I think we all have to be a little bit cautious about assuming that this is going to happen overnight. That some of these products are being labeled as the panacea for almost anything, right? So I think that's one of the reasons why the FDA and the regulators are being so cautious, and why they should be. And I think investors are going to need to really do a lot of work in assessing which of the companies who make these claims that we are the largest in X, or we have the broadest distribution reach, or that we are the highest margin company. I mean, there's just so many different ways in which investors could be steered towards some pretty extraordinary facts that may still need a little bit more work. I think that's again why I think there's a lot of anxiety about investing in the sector, and it's one of the things that makes bringing an ETF that does a lot of work and meets with these companies on a regular basis is a very useful product.
Yeah. So as you mentioned, there are so many different uses of cannabis, and there's a very interesting piece on the website, on your website for this ETF. It's the chemistry behind cannabis. So I certainly encourage our listeners to visit your website and take a look at the educational resources over there. So I wanted to ask you, what are some of the areas of this industry that excite you the most? Is it the medical use, or recreational use, or edibles, or CBD-infused beverages, or beauty products? Also, we see CBD lotions and everything now.
Yeah, I think first off, from the medical and the biopharma perspective, that is the part of the industry that I think is most interesting from the perspective of where research and science are still at such an early stage of development because of the legal restrictions on really conducting it properly in this country, which is certainly arguably the leader in global medical research. So the fact that there are a couple companies that have already begun pioneering treatments that are again changing the world as far as I'm concerned. And GW Pharma is a company who got out there early and spent a lot of time proving that research and a proper approach to science, and then approaching the FDA in a traditional kind of trial approach and with a botanical based product has been wildly successful. And they've been wildly successful not only in terms of their ability to get FDA approval on Epidiolex and a couple other products that are coming through the pipeline, but they just announced numbers 2 days ago, and what they really blew away the street in terms of expectations, both on consensus sales and earnings. This is going to be a $290 million in sales drug, possibly in 2019, which is going to make it one of the leading epilepsy treatments in that exists. That to me is what's so exciting, and that to me is ultimately where you're going to see extreme multiple expansion, or at least the opportunity for high multiple stocks, in the same way that biotech stocks have been able to garner such follow through. So obviously there's a whole bunch of other areas of cannabinoid research and follow through as it relates to treatment. I mean, the most obvious and highly cited areas include Crohn's, colitis. There's different forms of cancer treatment that at least are showing that they're having some impact. I think the most notable area and the kind of pharma side of it is where integrative medicine is at least providing tremendous relief to patients who have been significantly hurt by the opioid epidemic, and where the aggressive nature of opioids has been devastating and destructive for so many patients. In many cases, there's doctors that are out there using THC variables with also some of the existing pain medications that are available in pharma land to bring down that exposure by 75% and get people not only not addicted to extremely harmful drugs, but really giving them a much higher quality of life. So anyway, biopharma medical clearly has to be exciting for everybody, as far as I'm concerned. What's interesting is that what started out to be the place everybody wanted to invest, which was in the cultivation side, and those companies who had the most capacity, and often the metric that was used was funded capacity. And when people talked about the big Canadian LPs 2 years ago, that was all anybody wanted to know. I don't think that's interesting at all. I think it's really more about where some of the higher either margin elements of the production chain in a vertically integrated company that is growing, but also, as they say, seed to sale. I think it's a lot more interesting to see where these companies are evolving on their extraction, on their processing. Some of the themes in the portfolio right now that I think are more representative of where the market is rewarding these companies is in extraction, for example. So we own a couple of companies that are not massive, big multi-state operators, LPs in Canada. They're $500 million to $1 billion companies that are some of the leaders in extraction. So I think the technology of cultivation is fascinating. Clearly, the area where you're seeing for whether it's CBD, those companies that are actually doing the extraction and creating the isolates in various levels of purity. That's high margin business, and those are companies that I think are at least for now not in a commoditized business where I think the growers really are. Mm-hmm. I think technology around the industry is finally another place that's just fascinating, and I think it just gets really into just the consumer products approach to investing in any sector. But DTC, online marketplaces, all of the components of point of sale, and I think there are companies now that are really establishing a strong presence and are becoming kind of the go-to guys in the sector, no different than and frankly, these are companies that are either going to be bought by Amazon or by Square or by some of the big tech companies at some point, because that's the role they play in this sector specifically.
So I wanted to talk a little bit about the regulatory landscape for marijuana. And in fact, you have a very interesting piece on your website, again, on the timeline of the long history of cannabis by different cultures around the world. And that is dating back to 4000 BC. And restrictions on cannabis actually started much later, around 19th century. And here in the US, the FDA was formed in 1906, and it began to regulate cannabis. And as far as the current situation is concerned, recreational marijuana is legal in 11 states and Washington, D.C., and medical marijuana use is legal in 33 states. So, but it remains illegal at the federal level, as you had mentioned earlier. So do you expect any changes in the regulatory landscape for marijuana? And could you also talk a little bit about some of the recent legislative developments like the States Act and the Safe Banking Act?
Sure. By the way, the term marijuana is a prohibition term, which I think was clearly attached to the cannabis plant for those of us that want to get a little overly righteous about it, it's kind of a bad term. And it's interesting because its roots really come back from where there was a lot of propaganda in this country to obviously bring restrictions around it. But so as you pointed out, I mean, the evolution from a legal framework in this country is come a long way, and in the last 5 years, it's moved at a light speed, faster than I expected, faster than I think most people could have imagined. Some of that is just because I think there's much greater awareness about the underlying dynamics of the high and the THC products, and is it addictive? Is it a gateway drug? No, it's not. There's no lethality issues. People aren't dying from smoking too much cannabis or ingesting too much cannabis. They're just not. I mean, it's just there's not. You can have plenty of healthy and appropriate debate on behavioral issues and what's should be available to minors and all these things that I think societally are critical issues, enforcement, regulation. But when it comes down to it, I think the understanding of what cannabis is, and then how that's fit into a social framework over the years, where I think there's a much healthier understanding also of where socially this has been an issue that's been kind of an us and them in terms of who was on the right side of the law and who wasn't, and who was really ultimately being incarcerated. So what I'd say is the great news here, just for pragmatism, is that this is a bipartisan issue. This is an issue that both sides of the aisle want to grab onto and run with. This is not an issue that is seen as being relegated to a particular special interest group. This is big money for the states. This is big political favor for legislators, and we see it every single day in Washington. And so let's dive right into your question, because most notably in the last 10 days, we've seen the head of the Senate Banking Committee, Mike Crapo, a Republican senator from Idaho who chairs the committee, completely change his tune and be in favor of letting the people and letting the legislative environment essentially determine the next phase of development for this Safe Banking Act. So there were Senate banking hearings 2 weeks ago, and ultimately, again, to put a little background on what that is and what it would mean. The SAFE Act actually stands for the Secure and Fair Enforcement Banking Act, so that's what SAFE stands for. It's going to allow banks to legally handle proceeds from cannabis businesses in states where it is legal, and it's going to, essentially, there's been prohibiting certain federal banking regulators from, basically what's been happening is credit unions and banks have been unable to provide services to legitimate businesses. And so, the hearings last week were discussed on Capitol Hill, and that ultimately the progress for the first time where Senator Crapo voiced his support for legislation that would give cannabis businesses access to the banking system was extraordinary. And the sense I have is that getting approval in the Senate obviously needs to come after a bill is passed in the House. But what Crapo made clear was that if the House emphatically is in support, that he is not going to block this bill coming to the Senate. And I think that's just a few years ago, an Idaho Republican supporting cannabis banking would have been unthinkable.
Right.
Now it's a reality.
Mm-hmm. Okay, so let's talk about your ETF now. Again, it's Amplify Seymour Cannabis ETF with an excellent ticker symbol CNBS. And you talked a little bit about its investing approach. Tell us a little bit more about it, and also how is CNBS different from other cannabis ETFs? So
our investment approach is first of all, we want to be a pure cannabis play. We cannabis, CBD, hemp products. We don't want to be also investing in companies that we think might be at some point major players in the industry. We're not investing directly in big tobacco companies or big pharma companies or big alcohol companies who are obvious players in the industry, but they may or may not be there right now. So I think that's part of an important dynamic of just the purity factor. 80% of the companies in the sector, in the fund, have to have more than 50% of their revenues coming from cannabis investment. We essentially have three different sleeves. One is the largest one, which is going to be effectively cultivation and distribution and retail of cannabis and hemp products. That obviously includes all the big integrated, fully integrated companies. That includes those companies that are just focused on distribution, and it, within that sleeve, as we call it, there's obviously a lot of different sub verticals to invest in, but that is the biggest one. The next is technology, and that would also include hardware and just various forms of consumption and ingestion products. There would be everything related to the technology around processing. Some of the companies who are truly involved in as we say, kind of the core extraction technology, agricultural technology. The third would be ancillary services, and those would be support services to the industry, and that could be everything from financial advisory, direct investment funds. That could be insurance providers. That could be REITs that are leasing the real estate. Companies that are building out warehouses and manufacturing facilities. So we're trying to get kind of the full reach. And I should say in the first bucket, that clearly is also where we have the biopharma medical dynamic of investing. So for us, again, I think the goal is to be investing in companies that are active in the sector right now. We are not looking to have broader exposure to companies that might get into the sector at some point. While that may be, a lot of those companies, for example, big food and tobacco and alcohol players, especially during volatile market periods, they become probably pretty good portfolio stabilizers. But they're also a drag on the portfolio when things are going higher, and the drivers that are leading investment and valuations higher are made clear in the market. An example of that is actually Imperial Brands. A couple weeks ago, made a $123 million investment into a company called Auxly, and Imperial, for those that don't know, is a company who's a big tobacco company whose main brands include Kool and a few others like that. So on that day, Auxly was up 19-20%. Has continued actually to rally since then, and Imperial didn't do anything, and they shouldn't have done anything. I mean, it's a multi-billion-dollar company that's made a commitment. You could really see how this is played out even with Constellation Brands, who's one of the leading global spirits producers and distributors, and their investment in Canopy, which is then invested in Acreage, hasn't necessarily had a direct follow through to the performance of that stock. So anyway, we get a little bit righteous about that. I think in terms of that, which makes us different is just some of that focus. Clearly, active is what makes us different. What makes us different is that while we're not trying to be tactical in the portfolio on a daily basis and maybe trade in and out of stocks, we're certainly going to be able to react to market changes, whether it's M&A, new listings, IPOs, so capital markets activity, which is, I think, going to define the next 12 months in this industry. We, on a daily basis, can make changes to the portfolio based upon things we see happening, things that we've done research on. We also clearly don't have to own companies that we think are under some level of scrutiny, whether it's corporate governance, whether it's regulatory, whether it's clearly just structurally unprofitable businesses. A most obvious example of that is a company called CanTrust, right, which was one of the big four players in Canada, not in our portfolio, not going to be in our portfolio, even though you could see maybe a big bounce off the bottom here until we get comfortable really with the regulatory risks around the company. Right now, Health Canada is undergoing an extensive review on some of the practices there and the lack of compliance. And to us, we don't have to be investing there, and therefore I think a lot of other players in the space may just be putting together a representative portfolio, or will own that stock and would like to get out of it, but their rebalancing doesn't allow them to get out of it until you've already suffered a major drawdown. So active is key. And I guess what I would stress is that I'm in the middle of this industry every single day. I'm talking to CEOs, leaders, regulators every single day, and I think that's more critical than anything. Mm-hmm. I think it's important to understand how this sector is evolving rather than putting a portfolio together even on a weekly or a monthly or a quarterly basis that seems to be a good representation of the industry. I think you have to roll up your sleeves and meet with companies every day.
Yeah, definitely.
Nina, and this is Christian. I would just add that Tim is humble, but I think what investors access in the CNBS ETF is the experience that Tim provides in the sector. We have a variety of ETFs that are out in the marketplace, and we were looking for another real expert to partner with in the cannabis space who could actively respond to the risks on a daily basis, but also the opportunities on the daily basis that happen in the space. And we couldn't find a more highly qualified and experienced investor in Tim Seymour to become portfolio manager of this type of a product. So I think you're really harnessing an expertise level that I think has been demonstrated through most of the podcast. Very deep in knowledge and in relationships. Somebody who's investing in the public side as well as the private side. I think that really sets us apart. The other thing I would just add is there are some other active ETFs out there. One big difference in our active ETF is that we're not going to invest in derivatives. Okay. And we've made that decision because we think it introduces additional risks to the portfolio, certainly counterparty risk when you're owning a swap contract or derivative exposure. Also, the securities that have been targeted for swaps are securities that aren't operating legally in the U.S. They can't be listed on the New York Stock Exchange or the NASDAQ. And, as you know, in our portfolio mandate, our prospectus, we can't own any companies that are operating illegally. So to financial engineer a way to get exposure to those companies through swaps doesn't seem appropriate to us and in line with the prospectus language. So we're avoiding owning any derivatives due to those risks. We think there's enough volatility in the cannabis space without introducing counterparty risk or the risk that you're exposed to a company that is operating illegally and has consequences applied to them by the Justice Department or by law enforcement authorities.
Okay.
And I would add one more thing.
Sure.
Yeah, Nina, I mean, the other thing that's a frustration for me as a portfolio manager, but it's ultimately really what's in the best interest of our investors, is that there's a legal opinion in addition to normal kind of compliance screening function that governs what I can invest in. So to the extent that many investors are still very concerned about having exposure to companies that may be on the wrong side of some federal assessment and again, whether it's some of the banking dynamics, whether it's a Canadian company that's listed in the U.S. because they can be, because they're not federally touching the U.S. market, but maybe is starting to and is at risk of throwing their U.S. listing, which would be devastating for the stock price. So the key is that we're investing in what we can right now. That's at times very frustrating as a portfolio manager because I do think that there are broader investment trends that I would like to have in this portfolio today. I'm sure they'll be in there tomorrow, but we're not messing around with an environment where still why are big institutions not investing in this sector? Because they need to know with certainty the regulatory environment, and so we are at least. We've approached the construction of the portfolio and the building of the product not only as a function of what we can do, but also where we can be proactive and we can give investors a product that at least has been, as best we can, stress tested internally, and we have a third-party legal opinion on what we can invest in.
Okay, great. So just for the benefit of our listeners, I would like to mention that there are 5 pot ETFs on the market now. MJ, which changed its index in December of 2017, and then 4 made their debut this year. In addition to yours, there's YOLO, THCX, and TOKE. 3 are actively managed, and 2 are tracking indexes. YOLO holds swap to own U.S. multi-state operators. Now, Tim, you are the manager of this ETF, so obviously if I look at the top holdings, they must be your favorite cannabis stocks. I see Aurora Cannabis, Canopy Growth, GW Pharma, which you talked a little bit about earlier, Medifarm, Organigram Holdings, Ephria. Would you like to talk a little bit about some of the top holdings?
Sure, thanks. So just quickly, right at the top of the balance sheet. I don't need to spend a lot of time on names that people may know more about, but I'll just say this, that with Canopy, as far as I'm concerned, they are still best positioned for Cannabis 2.0 derivative products, which are starting to unfold in Canada. So the regulatory environment now changes a bit as we get into the fall. There's no question to me that their balance sheet is well, it's undisputable they have the best balance sheet in the sector. But I think the management team is, even with a change at the top, by the way, which I think is hindered the performance of the stock in the last month, when Bruce Linton, who's clearly been a visionary and the founder of the company, was effectively fired. The driver for the stock is that a new management team is going to be put in place that is going to be, I'm sure, representative of a very sophisticated consumer products pedigree, which is going to be what the next phase of this company needs. It says nothing negative about where it's come from. It says where it's going. And to me, I actually still think that this is, especially after a drawdown in the last 3 months of almost 35%. This is a company that fundamentally nothing's changed. Their vision hasn't changed, and that's very important to me. As mentioned, there's a couple other names in there. First of all, one of the names that is a bit of a surprise to people might be Canaccord Genuity, which is the Canadian investment bank, which to me has been the number one dominant player in the cannabis capital markets and remains so. And for as long as the U.S. is constrained, Canopy is going to be getting a disproportionate amount of their essentially their earnings growth coming from cannabis, and they remain best positioned to really be kind of the bulge bracket player in the sector. It's a valuation that is very compelling in traditional banking metrics. It's a bank that's just paid a special dividend. It's a bank that I have an expectation they're going to pay another special dividend. So it's one of the reasons why that name is in there, and I'm sure it's not in other people's portfolios, at least now. Canopy Rivers is one of the large kind of investment funds, and it is an entity that essentially at one point was created by the Canopy Growth guys, but it's being run by a handful of, I think, incredibly sharp and tied in fund managers and guys that are early kind of pioneers in the space. They have a couple heavy exposures to companies in their portfolio that I want to own in my portfolio, and I can own them through owning Canopy Rivers. One of them is a company called TerraScent, which to me is potentially one of the most interesting kind of North American operators. They have heavy cultivation and assets up in Canada, but they're also very well positioned in the U.S. And have a heavy wellness and kind of science bent. And it's a great way for me to get exposure to that company, as it's one of the top positions. It is the top position in that fund. So I think those are other big ones. MediPharm is a name that is also one of the extractor kind of stories. They're a big team in the portfolio, as I mentioned. Right now, they are growing private label production and white label production, serving direct, to consumers. I think it's the kind of a story that we can have a heavier weighting in our portfolio vis-a-vis what other people are doing, because we can have that kind of a theme in the portfolio. So that gives you a little snapshot of some of the names that make up the largest weightings in the portfolio.
Okay, great. So many of these stocks have had a rough ride of late, and some of the recent developments, particularly involving CanTrust, which you mentioned earlier, they have unnerved investors a little bit. So could you talk a little bit about which stocks investors should stay away from, or about the recent developments?
I'm going to put the same hat I put on CNBC where I feel I always want to be cautious about telling people what to buy or sell.
Okay.
I don't, I'm, if anything, our portfolio will be representative of I think those views. But I do think it's important for investors to understand when they're investing in individual names in the sector that they need to understand also the capital structure of the company. They need to understand how much cash is on the balance sheet, where there are debt covenants that the companies may have with regard to major asset-backed loans that they've taken out, et cetera. Again, in a world where some of this traditional forms of financing and for other industries is actually very difficult for them to find. I think some of the movement you've seen in the stocks in the sector have been around capital markets factors. Companies that are going into a difficult period where they need to raise more money. Valuations aren't terribly cheap in some cases. Right. Market knows they need more money. Their competitors know they need more money. And most notably, the most sophisticated investors in the space know they need more money. So valuations are coming down. Looking at, in the same way, if you're watching CNBC today, you're going to hear people talking about, well, what are the lockups and for the insiders and for the IPO on Uber and Lyft over the last 48 hours. That's been big news as part of their earnings releases. Well, I mean, the same thing goes on in the cannabis sector. And if you'll remember, one of the big things that also was important to kind of how stock like Tilray traded a year ago. So investors need to understand as best they can and do their work. Look, S1 filings, S4 filings, I mean, these are out there. You can do your work. You can understand a little bit about how these companies are structured and where the insiders and the officers have made filings or where there's going to be extensions of lockups. So I think, in terms of names that we generally like, I think there are there's some fantastic operators, and you're starting to see some separation between those. I'll say simply, a name like Aphria, who's in our portfolio, who announced numbers earlier this week, and the stock spiked 40%. There's been a lot of news flow on Aphria over the last 2 years. Some of it has not been good in terms of some insider dealings and some transactions at some inflated prices, and the stock was heavily punished. There were some management changes. Aphria is now actually being run by Irwin Simon, who people may know from his Celestial days. But the company is one of the best operators in the space, and they proved that. And the fact that they their GMP certified distribution business into Germany was one of the bigger drivers of that earnings release, tells you that they are executing on a global platform. So I guess, to me, I think investors just need to understand that there are also companies in the space that have valuations that will never be justifiable and that are structurally not going to be profitable as they are created today. And a couple of these are some of the bigger ones, as far as I'm concerned. I think the companies that have been very thoughtful about carving out strategic relationships with bulge bracket multinational firms are ones that there's a lot of inherent value in those relationships, but it doesn't necessarily mean that they're going to be able to convert on those relationships. So just when you see a headline about a multi-billion-dollar global firm doing some kind of an LOI or a JV with someone, try to understand what it really means. Try to really understand if there's a commitment that means that you now do truly have access to this global distribution and branding and packaging and logistics infrastructure of this partner, and all of their R&D and all of their technological expertise and their balance sheet. Doesn't always mean that. So.
Okay, that's very helpful. So I wanted to switch gears a little bit and talk about thematic ETFs in general. And Christian, you have a number of ETFs that focus on disruptive innovation, like the online retail ETF, iBuy, and the international version, XBuy. There's a blockchain ETF, Block, battery metals ETF BAT, and peer-to-peer lending and crowdfunding ETF Lend. And in full disclosure, I own iBuy in an ETF investor portfolio that I manage for our clients. So these are areas which have a lot of growth potential, but they are going to be very volatile too. So tell us a little bit about the role of thematic ETFs in investors' portfolios in general.
Yeah, thanks, Nina. I think thematic ETFs are, I think, a great tool for investors to try to access some of these emerging growth trends where it's very hard to maybe select one or two stocks and make a bet on those stocks. There's a lot of business-specific risk, whether it's management teams, whether it's geography, whether it's even the business case that they're exploring. So the thematic ETF really allows you as an investor to access that theme, but do so in a diversified way. All of our thematic ETFs are professionally selected. There are minimum requirements for liquidity, for market capitalization. Most of the ETFs have some type of purity test or standard whereby a company has to have a specific amount of revenue, for example, or market share in a certain theme. Some of our ETFs in the more dynamic spaces, blockchain and now cannabis, actually have a portfolio manager that's actively managing the portfolio and responding to these daily opportunities and risks that often happen in these emerging spaces. All of the thematic ETFs also list their portfolio holdings on a daily basis. So as an investor, you know exactly what 32 cannabis companies you're exposed to on a daily basis, and maybe sometimes more importantly, which ones you aren't, because oftentimes people really want to know if they own a company that's in the news for a bad reason. This allows investors to really control their exposure to certain types of companies, also to be better asset allocators and try to avoid, for example, overlap that they may not realize they could have. So we think thematic ETFs fill a nice space within investors' portfolio, investors that are looking to capitalize on growth trends. We tend to, at Amplify, launch ETFs that are focused on areas that are disrupting traditional business models. So whether it's that brick-and-mortar banking business that's being disrupted by online lenders around the world in our Lend ETF, or our original thematic ETF, iBuy, which focuses on companies that have 70% or more of their revenue from online retail sales, which that fund just passed its 3-year anniversary and had a 5-star rating from Morningstar. So we think thematic ETFs are certainly not a core portion of investors' portfolios, but can be a great complement to their existing core, hopefully add some alpha over the long term to their core, and maybe even some active shares, some exposure to companies that wouldn't be owned in their traditional large, mid, or small cap exposure. So we're pleased to launch CNBS with Tim Seymour and think it's a great addition to kind of our disruptive ETF lineup.
That's excellent. That's all we have time for today. Tim and Christian, thanks again for joining us.
Thanks, Nina. Pleasure to be here.
Thanks for listening. If you want to learn more about this ETF, please visit amplifyetfs.com. Make sure to be on the lookout for the next edition of ETF Spotlight, and also make sure to subscribe. If you have any comments or questions, please email podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.